Hello everyone. In this video, we will understand the concept of cash budget. So while preparing cash budget, we have to follow a formula, that is opening cash balance opening cash balance plus estimated cash receipt minus estimated cash payment. That answer that is equal to closing cash balance. Let me take an example. Suppose December opening cash balance is 500, estimated cash receipt for example 2000, and estimated cash payment is 300. Now 500 plus 2000 minus 300, that is my closing cash balance, that is equal to 2200 of December, and closing cash balance of December. This will become the opening cash balance of next month, means January. This 2200 will become the opening balance, and suppose 2200, again I have some estimated cash receipt for example 2000, yeah 3000. Again I will deduct 1000 as cash payment, that is my answer. 5200 minus 1000 is equal to 4200, and this is the closing cash balance of Jan. So this will become the opening cash balance of next month. This is the cycle we have to follow. If it is on month, या quarter, या week, closing cash balance of first month will become the opening cash balance of next month. So we do one question. This is the question. Here we have to prepare a cash budget for the month of June, July and August. Income expenditure forecast is given. These are the information given. So there are some adjustment, the additional information is also given. So we prepare the cash budget for 3 months ended. According to the question, it is written there, we have to prepare a budget for June, July and August. Now, so cash balance on 1st June 2020, that is given 1,32,600. So we write it here. Opening cash balance that is 1,32,600 plus estimated cash receipt. Estimated cash receipt means it may be sale, credit sale or cash sale, it may be any income we are getting, that comes under estimated cash receipt, and we have to deduct estimated cash payment. Estimated cash payment means it may be payment of wages, payment of any type of overheads, purchases, tax payment, all are comes under estimated cash payment. So one by one we have to look into it. First one, advance tax of rupees 6000 each is payable in April and June. First we have to identify whether this transaction is estimated cash payment or estimated cash receipt. If it is written each is payable, then it is comes under estimated cash payment. Now when we have to pay April and June, we are not preparing the budget for April, so we have to show this amount in June. So we write it here, advance tax 6000 in bracket these two nil, Next, 50% of the sales are realized in the subsequent month. So this is one of the most important adjustment. Sale values are given April, May, June, July, August and September. So we prepare the working note. Working note, sales are given and in adjustment it is written 50% of the sales are realized in the subsequent month. Now April 50,000, 50%, 50%, so we write it here 25,000, here also 25,000. Now 50% of the sale are realized in a subsequent month means 25,000 we realized in April and this 25,000 in May. This we realize it in April and this amount we realize it in May. Again in May there is a sale of 54,000. We have to segregate it into 27,000 and here it is 27,000. This 50% we realize it in May and this one subsequent month means June. So how much amount we have to pay it in the month of May? Previous month 25,000 plus 27,000 of this month. So total we have to pay it in May, that is equal to 25,000 plus 27,000, that is equal to 52,000. And next month June, again we have to segregate it into 50%, 50%, that is 30,000 and 30,000. This 30,000 we have to pay it in June itself and this amount we pay it in the subsequent month, that is equal to July. So total amount should be paid in June, that is equal to 27,000 plus 30,000, that is equal to 57,000. So sales comes under estimated cash receipt. So we write it here, sale in the month of June, how much we have to pay? 57,000. So we write it here 57,000. And for next month calculation, 68,000, that we have to pay it in July, but 50% of the sales are paid here. So 50% of 68,000 is equal to 34,000. So 34,000 we pay it in July itself and the remaining 50% we have to pay it in the next month, that is August. So how much we have to pay it in the month of July? Previous month 30,000 plus 34,000, that is equal to 64,000. So we write it in this table 64,000. And for next month 72,000, half of 72,000 is equal to 36,000. Here it is 50% in the next month, that is 36,000. This amount we pay it in the same month, that is August, and this amount we pay it in the subsequent month, that is equal to September. Now how much we have to pay it in the month of August? That is equal to 34,000 plus 36,000, that is equal to 70,000. So we write it in this here, that is 70,000. Further calculation it is not necessary to calculate because we have to prepare the budget for June, July and August. Next adjustment, credit period allowed by the supplier is 2 months. First we have to identify this transaction is related to which item. Credit allowed by the supplier means it is related to purchases. So here purchases is given in the question. So how much time period we are getting from the supplier? That is 2 months. Means here the information is given for April means the payment we have to pay this 40,000 we have to pay it in after 2 months means April May, this amount we pay it in June, and this 44,000 after 2 months means of May June, after that this amount we pay it in July, and this 52,000 we pay it in after 2 months, that is in August. Means from the supplier we are getting a credit period of 2 months. Means if we purchase the goods on this December, we have to pay it in February. Means after December, January we have to pay it. So here we have to write the answers. So in June we write it here. So purchases, June we write it here 40,000, and in next month according to the question it is 44,000, so we write it here 44,000, and in next month we have to write it here 52,000. Now next transaction, delay in payment of wages. Sometimes it may be written the lag in payment. Wages, selling expense and distribution expense, how much time we are get delay? 30 days means 1 month. Means the payment of April we have to pay it in May, the payment of May we have to pay it in June, and this one we pay it this month, this one we pay it in this month, like this. So for the three categories same adjustment, so we write it here. First case wages, first amount is 12,000, second amount 14,000, and in case of August, that is equal to 16,000. 16,000. We continue with the budget in the next page. So here we write June, July, August. Here we continue. First we write selling expense, same adjustment. 1 month delay means the payment of April we have to pay it in May, and this amount we pay it in this month, and this amount we pay it in this month. So we write it there in the table. In June we have to write it there 2200, and in this month we write it here 2500, and in August we write it here 2400. And after that distribution expenses, we write it here distribution expenses. According to the question, distribution expenses is also given 1400, we have to pay it in 1400, 1600 and 1400. So we write it here 1400, 1600, 1400. Now next adjustment, according to the question, company plan to purchase a machine for rupees 90,000, for which it has to pay the consideration in 3 equal installment in the month of April, June and August. So we are not preparing the budget for April, we have to show the amount. 3 equal installment means 90,000, 3 installment, that is 30,000, 30,000 and 30,000. So we write it here machine installment, that is equal to 30,000. Here we don't have to pay, here also 30,000. Now before calculating the closing balance, always we have to remember, look at the information, if any expense without any adjustment, all the adjustment we have taken, so we can calculate the closing cash balance. So closing cash balance, in order to calculate that, opening cash balance plus estimated cash receipt minus estimated cash payment, that is the closing cash balance. So we write it here closing cash balance of June. How to calculate? 1,32,600 plus 57,000 minus 6,000 minus 40,000 minus 12,000. Then continue, minus 2,200 minus 1,400 minus 30,000, that is equal to 98,000. Now most important point we have to remember, that is closing cash balance of first month will become the opening cash balance of next month. Means closing cash balance of June, that will become the opening of July, and closing cash balance of July, that will become the opening of August according to the question. So we have calculated the closing cash balance of 98,000. This will become the opening of next month, that so we write it here 98,000. Again add cash receipt and deduct cash payment. 98,000 plus 64,000 minus 44,000 minus 14,000, then minus 2,500 minus 1,600, that is equal to 9,99,000. Now this will become the opening of 99,900. 99,900. So this will become the opening of next month. So we write it here 99,900 plus 70,000 minus 52,000, 1,600, 16,000, 2,400, 1,400, 30,000, that is equal to 68,100. Thanks for watching the video.